Good morning, everybody. Welcome to Flip Flop Day. Another, I don't know, what's the opposite of a rug pull, Kay? When the rug doesn't get pulled, it gets put back under. What's that one called, mate?
Hey, mate. Hello, everybody. Yeah.
Carpet fitting day? I don't know what it is.
Let's say the rug got cleaned.
Something happened to the rug anyway. Yeah, another funny day for markets. Mr. Trump putting another 180.
We're trading in
So,
the wrong. We're trading in the wrong time zone, mate. We're going to have to trade America and Asia.
yeah, well, I'm not doing a flow show in the Asia time at 3 o'clock in the morning. I can give you a clue.
How's your Japanese?
Non-existent. Outside of being polite, yeah. Right, let's crack on. Lots to get through today. China, that country that everyone was trying to deleverage away from over the last few years. They're ringing round the countries, trying to get them on side. Apparently, Chinese Premier Li sent a letter to Japanese PM Ishiba calling for a coordinated response for US tariff measures. That's according to Kyodo News. China's foreign minister was out saying that China is willing to further strengthen high-level exchanges with the EU and consolidate the foundation of mutual trust and properly manage differences. They also said they're ready to work with the UK to eliminate all distractions. So they want to be pally-pally with everyone else at the moment. Speaking about Japan, a Reuters poll now sees economists and the like expecting the BOJ to hold rates all the way through June. 84% of those economists expect no change through to the end of Q2. 52% see the BOJ raising the rate to 0.75% in Q3. That was down from 70% in the March poll. 28% specified July for the next hike, while 23% say 2026 or later. So the market changing its hawkish tone over the BOJ, which in some sense, just as we like to say, you need to know what the market is thinking going into these meetings as to then judge what the reaction will be. So market getting a little bit less hawkish over the BOJ. Are they right, Kay, or could we still be on for a hike after the next meeting?
The thing is, Akazawa said that the next meeting with Bessent and his crew is only planned for the 30th of April. And so that puts it right a day before the next Bank of Japan meeting. So if there's nothing coming out of that meeting or they are still discussing, it may indeed hint at a hold. But I think a lot will depend now. We know about the inflation is kind of okay to continue. The wages should be kind of okay as well, as we saw. But now I think the big question is how are those trade talks going to go? And that may indeed put them on a hold. I thought for a long time that that May was going to be the next meeting that they would hike, but there's so much happening in the meantime that yeah, they may want to wait a little bit, be cautious, just look at what's happening. Japanese yields are a bit yo-yoing, but not going too far either. So there's no pressure anywhere for them to do something in the immediate. So yeah, probably I'm starting to lean more towards a halt as well for this meeting.
Yeah, and it's well, it's not too far to the next one after that. That's the June meeting, but it seems a lot of people are ruling out anything this side of June. So yeah, maybe the market might be a little bit too unhawkish, let's say, on that one. If the data keeps holding up, certainly going to be interesting. Anyway, do you think if they don't do anything in May, they might tee it up for the next meeting, or will they just keep strong and?
It's always difficult to know exactly what they think on a meeting. We've getting more hints outside meetings than during meetings, right? When one or the other Bank of Japan but talks to the press a few weeks or a week before the other meeting, which is actually if May is on the table, we should start to hear something in the Japanese press, which is let's face it, a lot more important than a Reuters poll, right? So yeah, well, they're not going to give it to us on a plate. Probably if they don't do anything now, well, you never know with Ueda, but he likes to communicate also sometimes within meetings. So I think we may have to wait a few weeks before knowing exactly what they think for June.
Yeah, very much so. And well, I suppose where are we? We probably start getting the sources pieces from next week or the end of this week, leading up to that May report or May meeting. So have to keep an eye out for that as well. Right, we had a ton of PMI data dropping out, starting over in Down Underland, Australia. Manufacturing flash number going backwards a little bit, same as the services. So slight drops there for both of those. Japan as well, missing expectations, still in contraction, but up a pip over last month. Services improving by 2.2 pips, so good news over there still for Japan. There was a little slide last month, I think, to the 50 level, and that's bounced back nicely. We've had some data out from the UK and more great news for the Chancellor in borrowing numbers. Borrowing is up 16.44 billion above expectations. We've also had the central government NCR, which is net cash requirement, rising to a whopping 21.1 billion from a prior 8.4 billion. Public finances coming in at 2.7 billion versus 6.4 billion. Sorry, they don't put all the numbers on this calendar. Now, what has also changed is that the 2024-25 budget deficit is running at around 151, just under 152 billion. That's above the OBR Office of Budget Responsibility forecast of 137 billion, and the net cash requirement for the same period running at just over 180 billion from the OBR forecast of 172 billion. So still the finances of the UK are running worse than what has been forecast and what the Chancellor would like. Not that the market's paying much attention to that today, but that is an ongoing theme over here, how the Chancellor and what she might have to do at the next budget to bring all those numbers back into line. While we're on the data, might as well look at all the other PMIs. France, they saw manufacturing going backwards, though not as much as expected. Services as well dipping back. Germany the same. Manufacturing beat expectations but still dropped from last month. Services went back into contraction from expansion. As you can see there, the pan-eurozone numbers reflecting the same. UK as well, a soggy one, unchanged or as expected on manufacturing, but down from the 44.9 previously. Services also going from a healthy 52.5 to 48.9 into contraction. So all these countries may be trying to get away from the US. They're still not seeing any green shoots developing in the early part of the year. Okay, those German, French numbers obviously justifying why euro should be trading at 115.
Yeah, it's I thought that may happen. The April data showing weaknesses across the board. We will see what the US is doing because they as we know it's the biggest market. That could that could throw things a spanner in the works as well. And I'm expecting those data to well, the logic would say that those data should be a bit on the weak side as well. So we will see. We're in testing the waters now. The data US versus the data across the Atlantic, or actually versus the rest of the main partners. So um, no, not good data, that's for sure. But how will the US data compare to it is probably going to be the main driver for perhaps some moves, is a comparison between US and the rest.
Yeah, it's important to know how to read what the data means these days. It probably means very little in terms of the central bank trade, because pretty much all the central banks are on hold while they look at the mess going on. So it's really all this data, particularly PMIs, is all about how the effect of all the trade policy is impacting. I mean, the UK report, it was bad upon bad upon bad in terms of sentiment, expectations, employment. Everything was seemingly like we're disappearing into a fiery abyss again. But as you can see from markets, there's not that much bigger move. So all this data, and again, this is private data, private survey data. We're not yet seeing this impact in the hard data. And until we start seeing that, then the market only gives it sort of a bit of a cursory glance. But we have to wait and see. As I say, the market is looking for bad news from all this trade stuff, and it's getting it in the PMIs at the moment. Over to France, and President Macron is apparently looking at the autumn for pulling out an election, a snap election. I don't know how they call it a snap election when he's pumping it for 6 months in advance, but there you go. So that's what we're looking at potentially from France. ECB's Casimir says inflation is expected to reach the 2% target in the next few months. We need time to assess all the risks associated with tariffs. What happens at the June meeting depends on the data, forecast, and risk outlook. The usual punt can kick on what's expected, but says it's impossible to get total certainty by June. So he's covering all bases. ECB's Ren see tariffs pushing inflation down in the short term. A bit of a repeat comment. ECB's Vilroy says Trump is playing a lose-lose game on trade. ECB's De Guindos finally decides to pipe up, saying downside risks to growth are materialising. ECB's Lagarde was on the TV saying that this inflationary path is clearly on its way. Inflation is heading towards the 2% target in this year, and the disinflationary path is nearing completion. About monetary policy moving forward, says we cut or pause, but we will be data dependent to the extreme. And the ECB doesn't see a recession in the euro area. One thing I wanted to ask Kate, I can't remember if I missed it or not. Did we get a sources piece last week after the ECB?
Yes, and I forgot what they said.
Yeah, I must have done as well. So, all right, never mind. Moving on.
I really forgot what they said.
Couldn't have been that important then.
No.
Right, we'll move on.
Anyway, they are just like us, right? They look at what's happening, and then they say, and then they will probably say, "I told you," or this is going according to our projections, or so. Well, whatever. I mean, moving on.
Moving on very swiftly. A little bit of data out yesterday from the US and Canada. If I can find it, where are we? There we go. PPI data, raw materials pricing from Canada. A little bit softer. Our MPI coming in down 1% on the month, year on year, still up, but down at 3.9%. PPI, though, coming in at 0.5% on the month, but a bit lower at 4.7% on the year, but still mainly year-on-year numbers posting positive there. We also got the Philly Fed Services number, which is never on the calendar. That came in much worse than last month at minus 42.7 versus minus 32.5 previously. New orders shit the bed, coming in down 19.5. Employment largely unchanged, negative 7.5. Prices paid, that jumped to 46.5 from 36. However, prices received came in at minus 0.1 versus 8.4 previously. So a little bit of a potential profit margin squeeze going on there. Wages and benefits, that rose to 37.3 from 21.6. 6 month expectations, optimism, if you like, was much worse, minus 31.8 from minus 24. So more regional survey data not looking good. Richmond Fed manufacturing activity came in at minus 13 versus minus 4 prior, as you can see there. So manufacturing not looking good so far in April in the US. As Kay mentioned, we get the PMI later on. The good old Eurozone consumer confidence, all that investment spending, defence spending, isn't much for the consumer. That came in at another negative, worse at 16.7. So not looking chip over there, but that's a report that's only been positive about 4 times in its entire history. Fed's cash and carry says tariffs are somewhat inflationary. So going to get some of his ECB European colleagues are saying it's too soon to judge the path of interest rates. Fed's Kugler says tariffs are likely to exert a greater than expected economic pressure. The White House announced that they were close on Japan and India trade agreements. And then we had the fun and games. It all started with a Bloomberg piece, which told about US Treasury Secretary Bessent speaking to JP Morgan about China and saying that they are looking for de-escalation on that. And then further comments came out saying that the goal is not to decouple with the US or China economies. The US is seeking rebalancing with China, but the question is whether Beijing is ready to do it. These comments pretty much started getting the ball rolling that the US or the administration was looking to de-escalate with China, and that was confirmed later on by Mr. Trump, saying we are going to be very nice with China. They have to make a deal. This is a transition period. China and other countries have to make a deal. If they don't make a deal, we'll set the deal. And that the ultimate China tariff won't be near 145%. And that's where we got a bit of a reversal in markets. Euro dollar dropping all the way down to near 138. All the other pairs and assets moving accordingly. First and foremost, okay, it's clearly insider trading, isn't it? He speaks to JP Morgan, and then 5 minutes later, Trump comes out and confirms it all.
Yeah, absolutely. It's well, I've said it. I mean, nobody's probably going to get sent to jail under Trump on insider trading. That is that much is clear now. Yeah, I mean, it is. What else can I say? I mean, he's done it. He's done it already a couple of times, and it's just an ongoing story now. We had it all started, in fact, with what Lutnick did a while back, saying that yeah, Trump is probably thinking about that 90-day delay, and then all of a sudden 2 days later, and he goes like it's not on the agenda, and then all of a sudden it was on the agenda, and yeah, I think we need to just take it into account that this is what's going to happen for the next 3 and a bit years, unfortunately. Yeah.
Yeah. Now, as far as the market reaction concerned, obviously this happened at a pretty. This time of night can be a pretty illiquid time. It's just that little window between US closing and Asia opening. But we have bounced back quite a bit. Is that a bit of the market saying, okay, yeah, we've been here before. He was nice yesterday, but he might be nasty again today?
Yeah, I think the situation is still very fluid, but I mean, reading through what may be insider or not, we have been talking about this fluid situation, and we're seeing it again, because every show we do, every time I repeat, I say unless something changes, and the situation being so fluid now, things probably changed a little bit yesterday, towards China, towards Powell. So yeah, this is what we are going to trade with, and on, over the next foreseeable future. The thing is also the market is um, probably only half buying anything that Trump now says, because I mean the next 48 hours later everything can go out of the window again. But I think we are going to be very well, or we are entering a kind of test the dollar resolvence period, because if we get news that, I mean, okay, Powell could have been a big thing. Now it's gone. He clearly said that he's not going to get rid of him before the end of his mandate. But the thing on China is still, or on other, the tariffs are still relatively fluid. But we are in this test zone. Is, can the dollar undo everything that has been done? And there, the market, for now at least, is saying no. Something has changed since Trump arrives and started with the tariffs and talk about the whole trade environment. I'm on the same camp. I think something has changed, and we are going to really test what is going on now. What we have to look at it on the side, just for the trading now, is ask ourselves the question, or look at what the market is doing, is, are older correlations that got thrown completely out of the window when we said, like, oh, correlations with um, lower yields, lower dollar, higher equities, lower dollar, and vice versa, are they going to come back, or are we still in that zone where we say lower bonds, lower yields, bad for the dollar, and so on and so forth, which was what we were trading over the tariff. So now I think we are in this test period until the next headline. Of course, I mean, if all of a sudden Trump and China go and sit around the table, and it's now getting more and more clear that it's the US who are going to have to make the first move. China is just waiting for the call, right?
Yeah.
So what's going to happen then? And is the market going to um, go back onto the old correlations, or still continue to trade the correlations that we are in right now? Um, so yeah, I mean, now we are in this test zone, because we have seen a big move. We've seen a big move in the euro dollar, in all dollar pairs. We've seen a big move on gold, which is also what I said. I mean, if things change, then all of a sudden the gold hedge can be pushed back a little bit. We have seen that in a big way. Um, but now, what's next? And I'm going to watch the game a little bit and see what really is next.
Yeah, and we really don't know. As we say, it could be in the headline today, and it all flips around again. You have to keep, if you're trading through this, you have to keep your eye on the end game. The end game is still to get deals done, but the market isn't going to be really happy until people have signed bits of paper, executive orders, or whatever, to say that a deal is done. And until they get that, the market isn't going to go, oh, yeah, everything's fine and dandy, just because Trump made a few comments last night. So don't be thinking, oh, yeah, we're in good news land, good mood land, and everything's going to be all right going forward. We've still got uncertainty going on. So just don't get sucked into the narrative. Okay. Market was all getting fearful and panicky up here. It's just a bit less so, but it hasn't changed much down here either. So just keep that in the back of your mind. But yeah, Trump did come again, a bit of a easing on slaughtering Powell. He said he has no intention of firing Fed Chow. He would just like the chair to be early or on time. He says wants Powell to be more active on rates. And then we had the China Foreign Ministry this morning speaking about Trump's comments last night and on regarding a trade deal with China, saying the US can't say it wants to reach an agreement with China on one hand, and on the other keeps exerting extreme pressure. So they're still continuing to play a bit of hardball. They're not ready to come to bend the knee to Trump just yet, but there is the potential for a Xi-Trump meeting coming up soon. Over at in the Ukraine stuff, apparently, according to the FT, Putin has offered kindly to halt the invasion of Ukraine across the current front line as part of his efforts to reach a peace deal with Trump. Other sources saying that the US is proposing recognizing Crimea as Russian while these peace talks are kicking off. Witkoff will visit Russia to speak to Putin this week. So who knows what will be acceptable and what not. And lastly, everyone was watching Tesla earnings yesterday. They came in pretty shoddy. Perhaps the biggest news out of all the numbers was that operating income came in at just under 400 million versus 1.13 billion expected. So that operating income really taking a hit. That got everyone squawking about Musk and how he's putting too much time into Doge instead of his own company, and shareholders aren't happy. A lot of people forget that companies aren't there to make shareholders happy. They're there to run a business and get business happy and keep workers paid and whatnot. But anyway, that's investing for you. Even though Musk did say he will pull back significantly from Doge in May. That's been touted previously. That's it. Thankfully for all those headlines. Just the 27 minutes to get through that lot today. Anything else, Kay?
No. So Musk is basically firing everybody, and then he fires himself.
Well, you know,
I
if
mean,
you lead by example.
Jesus, I mean, I can hardly believe what's going on that side. I mean, we are non-political and non-religious and whatever, but when people do or make mistakes or stuff, we and as traders are entitled to look at the failures and the flaws in it. And I mean, it's incredible what happened on that front, for what I'm concerned anyway.
Yeah.
And that is one of the reasons as well why I think we may not be out of the woods with everything, because those people getting fired and all those state institutions getting merged and everything. I don't know. I can't see it as a very positive thing right now in the US, or for yeah, what happens on the employment front as well. I mean, we just can't forget that there are tens of thousands of people getting shown the door, right?
Yeah, yeah, and whether they get reallocated into other areas is another question. But that's for the US to deal with. We've got enough crap going on.
We'll trade it.
To deal with. But what's that, mate?
We'll trade it.
Yeah, we'll trade it. That's about all we'll do with it, if we can, of course. Right, speaking of trading, let's have a look at what's going on. I'm going to jump back to euro dollar. This is one of those times, okay, where I'm, because of the volatility, because of everything going on, I don't want to get caught pissing around in the middle of things. So I'm just mainly sticking to my big levels. I wanted to see if we got another rejection at some point yesterday up towards 115, outside of what we already saw. Maybe we'll get that today. I don't know. That will be of my interest, how we react up there again, outside of holiday trading that took us above. I thought we might see a rejection down to 114, maybe even 113. I wasn't expecting it to happen a few hours after I said it might. I thought it might be a couple of days to do that, but we got that. So really, I'm just keeping to my big levels. I'll see what happens at 112. I'll see what happens at 115, and if I'm going to trade it, I'll take my cues off of there. Everyone else can do what they like in between. That's all down to you. But I'm just going to stick to my bigger levels thereabouts. Dollar yen, that's obviously seen a bit of a jump up back into 143 on all that news, but then we've come back down pretty much in the middle, back down to 141.80s, and this area that we've knocked about previously, it's another one of those oldie zones. Oh, gone wonky. That we've pissed around before. Oh no, we're down here. So we had the break, we got back above, we've come down to it. Now we're just making a decision whether we're going to hold above it or below it. So use this 141s, 142s area as a bit of a pivot point for now. Okay, we can't get below and hold below for any significant length of time at the moment. So it could mark a significant area down here. I'll see whether it wants to continue, or I don't think the trends for breaking just yet. But as we said, that's evident that the market isn't truly trusting the news just yet because it's not maintaining these sorts of gains. Ali, you were asking about Aussie dollar. A few of us went long yesterday, trying to give that area of just around that 64 level and these prior highs a bit of a go. I did the same. I got stopped out for 20 pips, giving that a little go. This one is keeping its gains a bit more because obviously it's showing a bit of a hand that this is tied in with China stuff a lot, as we knew already. So the potential for something happening, a deal to be done between US and China, is being seen positive in Australia as well. We're having another look above 64. Let's come in a bit. Whether we can go on and take out that 64.40 is another question. Kay, what are your thoughts on this one?
Same. It should hold perhaps a little better, but then you have the dollar side of things. If the market decides that we need to correct more, Aussie dollar is perhaps going to hang around here for a while. But I'd say, and I started to think that yesterday as well. It may be time that it catches up a little bit with the rest. So I'd stick my neck out and say that we are going to hold a little better, but I may think that if you trade it from a risk point of view, it's perhaps better to do a cross or so if you feel like it, because the dollar side of things, as we see this morning, we are in testing mode. Is it going to hold the dollar? Is it going to get back to different correlations? Also, I'm not overly sure about the dollar side, but I do think that if risk continues to do better, which I think is a possibility, Aussie crosses maybe doing a bit better, and then you think about, yeah, Euro Aussie maybe a little lower, Aussie yen maybe a bit higher, those kind of things. For those who want to be a little bit more exotic, Aussie Swiss or so, those kind of things could be. I'm not saying a better play because it all depends on the dollar. If the dollar doesn't hold, it's probably going to be Aussie dollar as well. But yeah, I'd rather do it through a cross, and I actually did it this morning, only in small, because I don't know whether it's going to break or not. But I bought a small Aussie yen and see where it's going to take us.
Yeah, that's looking pretty similar to what Aussie dollar was looking like. Just running into a bit of trouble when a bigger level just above around that 91, 90, 92 area. So, yeah, well, good luck with that one, mate. I was keeping half an eye on Aussie Kiwi. I just thought I'm looking for maybe to do a similar play on the upside. This is my pivot level, the magnet, as we call it, the 108. And we had a little stretch up there towards 112. We may have been having a little stretch down to sort of the similar range on the downside, maybe down 105.5, 105. That would be sort of a similar trade I'll be looking at on the other side to shorten up at 111s, 110s. Whether this news has put that to bed, I don't know. But this is one I'm keeping an eye on, as again, keeping the dollar out the picture, just looking at the crosses. So that's a couple of levels I'm looking at. Yes, mate.
This is getting to be quite a risk cross as well. I mean, and that's not really that obvious to. But if you go back already to what happened over the pandemic, we had a big drop in that Aussie Kiwi as well. So it is one of those crosses where it may not be obvious, but it is a bit of a risk cross as well. And we've seen with Reese doing better overnight that that this cross recovered a bit. It's still at 107. We are not, and it's Aussie Kiwi, right? This thing is not going to move like euro dollar or dollar yen 10% here and there. No, but it is a pair that is pretty much attached to risk as well.
Yeah, yeah, and it's also a speed pair like euro sterling is with cable and the euro. It's Kiwi's been obviously doing much better recently than the Aussie dollar, Kiwi dollar has been. So yeah, it's a bit of a speed pair on that one. Dollar Mex. This is one that I was looking at. I was hoping, we all hope in trading. I was looking to see if we got, after this break of 1990, if we got a rally back up there to maybe add to my shorts, but instead I've sort of I've decided to chase it lower a bit, just with this break of this 63 area down here. This is another one of those bit of a longer term lines, had plenty of action around it going back over the years. So this is a bit of a point that if we break and hold below, then we may get another leg lower, and thus far it's working out. I've actually just taken a bit of profit. I sold it 63s yesterday. I've just taken a bit of profit down here at 54 on that. Still core short from higher up, fortunately, but dollar mex is looking like it's on its way. Kay, they've sort of Mexicans they've been playing ball, or they've been out the limelight of late. Which is it?
Both. We've heard a lot of a lot from Scheinbaum, Ebrard, is it the finance minister? They've been over to the US a lot. They are a little out of the picture right now as well, because Trump obviously is more concentrated on whether it be the internal that he had with Powell, and then looking at China, looking at the relationship with Iran, Russia as well. Yeah, I think well, and you did very well, by the way, because I think we hit the high again when I was off to Japan, so I completely missed that one. And you did really well. I think it's a good trade still. I'm not saying that we're going back down to 18.5 from here, but it's still a very, very decent trade. And also don't forget that when it's quieting down, there is still a pretty big interest rate differential. And I'm not going to say that you get money for free, but if you're short, for instance, euro makes or even dollar makes or makes against something, long makes against something, you're still getting money to keep the position. So I think there's a little bit of a mix there. It is also, I think what also happened is that we've got this move in dollar CAD as well, but Canada is now stalling and the mix is continuing. There may be a bit of CAD versus Mexico going on there as well. So this is a pretty decent mix for Mexico, unless Trump sends a Truth Social post in onto the wave saying that it's okay, it's now USMCA which is dead, and we are going to renegotiate everything. Then you're going to see obviously a big ramp higher in the dollar mix. But right now, I think it's looking pretty good for that.
Yeah, absolutely. And this one, Bubbles highlighted this one because I had a level up this level here, 60s. We've hit it a couple of times now, yesterday and overnight, and it's held pretty solid. So that keeps this break in play in the downside beckoning for that, but we can't get through that 138 for any significant amount of time and hold it. So a bit of a battle going on
Still
over
this,
there.
yeah, this whole zone down to 137, 10, 20, 30 is a big zone to me at least. Got a slightly different picture on that dotted cat, but it's a big zone, and then I'm just looking at what Ali is doing. I mean, Ali, you it's okay to really okay to be short because I mean, who am I to say anything? But um, just bear in mind that we are stalling here. So whether we are going to go for the next leg lower still remains to be seen for me because we do have a big zone down there into the low 137s for me.
Yeah, and I see you got your stop bang on that 138.61. That is a big level, Ali. And you know what we say about putting your stops right on the level. So you're on doing all right at the moment, but just keep your eye where your stop is, okay? Because you don't want to be. It's tap that. Let's go into just, and then I'm going to pass it over to Kay. Look how many times we've tapped this 60, 65 area, okay? So you don't, while it's holding, you don't want to be pinged out on your stop to find that the level actually holds, and then you get your profit. So obviously your charts are your own, mate. So you know where your levels are. But that 38, 60, 70 area is a big one for me. Right, Kate, all yours, mate. Click, click, click.
Okie dokie, Derij, dollar Swiss. It's had a big a big jump, right? Yesterday it was really in danger of really breaking down again, breaking down through the next level. And I've always said like this 81.10, 81 and a half is relatively important to me. But we had a big rejection of this low here. So that brings this whole 81.10, 81.50 zone back into play. But to speak about a reversal, and we look at the dollar yen around that 144, four and a half, three quarters, four and a half. It's pretty similar. They've been trading pretty much together from a distance, of course, but pretty much together. But to get a real reversal, we are going to have to break above 83 to 83.40 for a starter, confirmation above 83.70, then we are going to talk about a real reversal. For as long as that doesn't happen, I think we still have to think that somewhere we may find resistance. Obviously, reversals always start somewhere. It could be a false break, and we are going to go at least for a retest of this 83 zone. Watch 82.70 in between. Okay, if that starts to give way again throughout the day, then we are going to probably move higher again. All right, but as I said, we are in a bit of a test mode here for the dollar. Um, I'm not sure if any breaks are sustainable right now, unless we get fresh news. The market needs to digest, rethink. Um, but for now, I think the worst may be over. That is something that we need to reckon with. Is that for as long as we now stay above 81.1050, the worst could be behind us for now. Okay, until we hear the next moves. Obviously, keep an eye on global risk. Keep an eye, for instance, on equity markets because they are related more than people used to look at the gold Swiss correlation. It has worked for a while, but um, obviously gold is lower, Swiss is lower. It works as well, but I would rather look at something like equity markets also to really know what's going on in the Swiss or see where risk takes us. I mean, Swiss is a real risk pair, and we've seen that also. Obviously, on that Euro Swiss, well done by the way, Ryan. I didn't keep mine as long as you do, but we are getting into to an interesting little zone here up to 94-ish. We are actually nearing um, pretty rapidly today, but we've had this similar kind of below the prior low towards those lows here. We spoke about this 92 and a half zone being very important on the Euro Swiss. We also are going higher here now. Keep an eye on 94, okay? That should be relatively interesting as well. Um, I'm going to look at well, obviously we need to look at what's happening in gold. $200 correction from the top. Yes, we were at relatively lofty levels. I said it so often. I mean, watch for it's a hedge somewhere against all bad things. And what did we have yesterday? Well, we had half good news. Trump not firing Powell. The door with China seeming to be open. And that's what happens then. And since we had those violent moves higher, we can equally do violent moves lower. So here as well, we are going to be in test mode. I think the first test zone here, 32.80, 33. And we've got another one around the prior highs here around 32.45. But really, if you look at the longer term, we're still, I still refuse to think, and again, similar as in Swiss, reversals always start from somewhere. But I would say, like, watch the big reversal would only happen if we start to break back below 31 and a half down to 3100. If that goes, then I think the whole party, maybe the whole card house, maybe falling apart. Okay, for the time being, and we have seen those. And I just continue to repeat what I'm saying every day. We have seen those retracements in the past as well. This is a big one. It could take us further, and I'm not going to catch knives right now because I want to see first of all how this market is going to react in today or over US data or everything. I'm not going to be part of this move because it's really like a big move. But the one that I am more positive about right now is silver. We've we've s- we are finding bits towards the low end of the range. And if you I remember what I said, I mean, silver should do better than gold in a more positive environment. Okay, we may be at the start, and we could be. I mean, always be very cautious right now, but we could be at the start of one of those periods where we see, and then people will look at the gold-silver ratio, which has exploded over the past months. But we could see a bit of a give back there now starting. And I would argue that if we see a move above 33.1025, top end of the range here, we could be back into a more positive play for silver. And it would be logic. If things improve, there may be a bit of rebalancing needing to be done. Silver is also a smaller market, so if we find a bit of a break here, I would say like a high 33s or even back up into the 34 and a half zone wouldn't be anything exaggerated in my opinion. Um, are you guys looking at anything specifically else? Brian is here. Let's quickly look at the cable. Look, cable has to make up its mind here. Okay, we saw this break of the 133, 132, 65, 70, 133, bit of a level there, trend line, fib, you name it. We went close to the prior high. Big rejection yesterday as well when the headlines dropped. It dropped through, but we are trading around, and I would say, and then bringing back to what I said about we are in the dollar test mode. Um, Look where we close today. I think that's going to be your best indicator right now. Look for the close today. If we close well above 133, we can't rule out a move back up to those prior highs for a retest. If you close well below 133 And then for the bears, ideally under 132.70, we may be on our way back to 131.5. And why not retest of this bigger support zone from where we saw the fun start again once we broke. Okay, so I think 133 is important enough to watch today for a close later on. The Americans will tell us what they want to do with their dollar once they come back online. And with that, Ryan, euro sterling range, Ali. Look, 86 and a quarter, 85. 20 down to 80, 85, 10, 20. We're in a range. Data stopped the move lower this morning, but we are in this range. As long as we're in this range, I'm neutral, but I still prefer to sell the rallies towards the top end of the range right here and now. And now I'm done. Ryan, back over to you, mate.
Thank you very much, mate. Great stuff as always. Last thing I want to do, if I can get it up, let's do that quickly. Just to repeat that we've got our sale still ongoing for the platform. We've had a lot of users take that up recently, including people who follow us here on the show. It's nice to see you in the chat room, and it's not going to last forever. So if you want to grab a 40% discount on our monthly subscriptions, then do so. Grab those while they last. Thanks everyone for coming to the Flow Show. We will see you all tomorrow. Trade safe. Watch out for those headlines. And me and Kay will catch you later on Face. Have a good one, everyone.